So what do you see right now being like the biggest opportunity or risk in investing in hospitality in the next 5 years?
Everybody says raising capital is difficult right now. I do agree with that, but I also feel like the ones that do invest right now, they're about a year and a half ahead of the game, because now in about a year and a half to 2 years, you're going to have these new products. You're able to look at CO buyers. You're able to position yourself to rinse and repeat capital. And that puts you in a very unique space. But you also need to have that unique investment group, family office, to be able to understand how that works.
Yeah.
And having a sponsor or syndication that understands that and has all that experience to be able to have a unified growth mentality, I think that goes a long way.
Welcome back to Check In with Bryan, the podcast where hospitality meets heart, hustle, and high-stakes decisions. I'm Bryan Fish, and today's guest is someone who truly embodies vision and grit in the hotel investment world. Joining us is Trusha Patel, the founder and CEO of Platinum Holdings Corporation. With nearly 3 decades of experience and over $500 million in transactions that she's facilitated, Trusha has redefined what it means to be an owner-operator and a strategic investor. We'll dive into her journey and learn just what it takes to lead boldly in today's evolving market. Get ready, this is a conversation about breaking molds, building value, and staying grounded through it all. This episode is brought to you by Reliance Hospitality Global, where hospitality meets strategy. Whether you're developing your next hotel, need help navigating operations, or you're looking to increase profitability through our expert consulting and business process outsourcing services, Reliance has you covered. From boutique independents to full-service brands, we help owners, investors, and partners unlock value at every stage. Visit RelianceHospitality.com to learn more, and let's build something remarkable together. Well, welcome back. I have been waiting for this moment for a year and a half, maybe almost 2 years at this point. I'm very excited to have this guest on today. Trusha Patel, CEO of Platinum Holdings Corporation. Trusha is the founder and CEO of Platinum Holdings, a hospitality investment and development firm specializing in strategic acquisitions, new construction, asset repositioning, and capital partnerships. With over 28 years of experience, facilitated transactions exceed $5 billion. She is known for aligning institutional capital with operational excellence to generate consistent returns. But we're not done yet. Trusha has led over $75 million in direct investments and is a trusted partner to private equity groups, institutional sponsors, and family offices. She holds an MA in psychology and an executive MBA from Baylor University, credentials that enhance her ability to navigate complex negotiations and foster lasting investor relationships. I feel like the psychology probably pays off a lot in that. And then lastly, a licensed commercial real estate broker and frequent speaker at national hospitality conferences. Trusha is recognized for her strategic insight and thought leadership in the hospitality investment space. So you're a little busy.
A tad bit.
Tad bit. You've had a remarkable career, 28 years in the hospitality industry. Did you ever expect that you were going to be in the hospitality industry? And if not, how did you land here?
That's a good question, actually. No, I mean, like very much a lot of immigrant families, my family was basically in the hotel business from the beginning. You know, at the age of 17, I helped my dad build his first hotel in San Antonio. And at that time, it was just more like a language barrier. It's like, you know, help me get through our loan, talk to the franchisor, excuse me, and just to get the hotel built. At that time, I didn't really know what was going on. It was such a big task that I said to myself, I am not doing this again. I'm going to do everything but hotels. So it just started my journey into psychology, went through, became a psychologist, went back to school after that. And you know, when I went back to school, I went back for my MBA. And for that part, it was trying to get into the corporate world and to be able to be taken real, where the education's solid and the experience is just, you know, you're able to kind of add to it. What I found out is over years and years, I've always been a hotel investor, but to be able to be on the corporate side and kind of look at it through the corporate lens, it gave me a different perspective of being an overall hotelier. And here I am 28 years later, making a full circle all the way in where I'm developing hotels and acquiring acquisitions and putting all that experience and knowledge, education, all the learning lessons all together into this robust think tank that I can kind of work towards. And, it puts me at where I'm at right now.
It's incredible. And you were at what is now CoStar, but it was 10X. You were there on the ground floor before that.
Before that was
sold.
auction.com as well.
Auction.com is what it...
Yes.
That's what it started as, right?
It did. It
Okay.
started as auction.com, then 10X, and then it got sold to CoStar. So, at that time, the vertical was being built for hospitality. Did a lot of grassroots efforts with the outside sales teams and, pretty much did all facets, bringing into the buyer journey, seller journey, going through the acquisition phase, and then ultimately helping buyers get through the closing part, working with brokers, sellers, investment groups, institutional parties. So you're wearing a lot of different multiple hats, and to be able to understand what is important for them, what's the value add, it really helped me understand the different facets in that whole journey of acquisition. And then on the flip side, it was also very interesting to see the disposition side. We're coming to a platform where a lot of assets are being deployed. And this is institutional assets. They're deployed because numbers and data don't support them being held. So now we're on the flip side, dispositioning those assets.
Yeah.
And at what price.
And I can imagine having, because you continue to invest in hotels, even though you weren't building them, you continue to invest in hotels. When you were doing that work with auction.com and 10X and going through that process, were you surprised by some of the things you would see from, even probably from within your own community that may have been investing?
Every day. Every day was a surprise because on the other side, I had a big team underneath me. And what they did is they vetted buyers for any asset that was on our platform. And during that time, what they're doing is they're trying to understand the buyer, pretty much what aligns to their acquisition goals, whether it be brand, whether it be a certain price point. Those are the things that we're pulling out. And so many times I would be able to, pick up and know a lot of people within my community that are, on the other side. Mm-hmm. But, having that confidentiality and being able to kind of look at it from their lens and understand our lens, that was an eye-opener for me.
Yeah.
Because you're not able to do anything with that information.
Right.
You can only guide each party as you're able to.
But were there any things that you found through that you started to see that as consistencies among, maybe on the disposition side of why these individual investors like you had been doing,
Yeah.
why they were ending up in a place where their property was getting auctioned off?
Well, put it this way, underestimating their book business, underestimating the cost of renovations and just to keep the property going. Mm-hmm. So many times we'd have a lot of buyers that would look at some assets and they would think that it's on an auction platform, so we're going to get a deal on it. So many times the case might be where you will get a deal, but you also got to consider factors in repositioning that asset with a particular brand. What are those costs associated with? What is the renovation cost? Which brand will fit this market? And that's all data. That's all marketing and being able to put a price next to that. And the better alignment you have on the price, it puts you in a position to know whether or not if that asset is truly a good buy and at what price. Because we also had a premium for, our services. 10X and auction.com, we don't own assets. Basically, they're assets that are on our platform. We're the connector for buyers and sellers to use our platform.
And everybody thinks their property's worth double what it is.
Of course, and
and it's in great condition. Doesn't need a PIP at all.
It's a great condition, but you know what? So many times we don't know what's in the pipeline. We don't know what cost we should be able to sell it for.
Yeah.
Who doesn't want a profit and who doesn't want a higher profit? It's really understanding a different lens, and that's why I went through my broker license, because I wanted to see what they're seeing, because they're the ones that are talking to the sellers. Brokers are the ones that are talking to the buyers. And for them to better understand what they are going through, their underwriting, and what process they go through, it puts a great alignment on that value add.
Yeah.
And a lot of my position was education. Education, knowing that you've done all your due diligence the way you need to, so that you're able to make a good business decision.
And you're not buying something blind.
And you cannot.
Yeah.
Some people, you're buying stuff off of an iPad, believe it or not. And we had, buyers buying stuff there was a buyer once that was buying an asset off of a cruise. Never visited the property at all. Basically went through just his underwriting. That happens, right?
Yeah.
That happens. And that's, we have technology that enables that successful acquisition.
Yeah, it's wild. Well, it's like some years back when I bought my house, like the notary was digital, and then like I signed all the paperwork digitally, and I was like, "Is this real? Am I really owning it?" Like,
right.
I feel like I should be signing like a big thing of paper
because that's what we're used to.
Because that's what you're used to doing.
And the other thing we have
even
to
the
keep in mind,
franchise agreements now, though, are DocuSign. So
they're very much.
And you're like, there's this like 90-page document that really could mess with your life at the end of the day.
Of course,
if anything's wrong, and it's like. You just flip right to the signature pages.
And that's why you need attorneys.
Yeah, that's why you need an attorney to read it.
You really need attorneys to read through the fine lines because they're going to alarm you of that.
Yeah, and they will read all 90 pages.
They'll read everything, and they're very much versed into knowing what needs to be on there and how to protect you, right, as the franchisee, excuse me. If you think about it, technology, it's 24/7. That was the theory behind having a platform at your fingertips 24/7. You can look through any documents, any information on the due diligence at your disposal, any time zone.
Yeah, which is great. Like I love it. You don't have to actually go pick up the phone and call somebody. Everything's there.
Exactly.
And then if you like can do the watch list thing, and then as they add documents.
But you also need the broker. That's why the broker is very important for our transactions, because they're the ones that are still going to be in that same position where they do the site visits, the tours, talk about the property. And making sure that the seller or buyer, they really understand what that truly the asset is providing.
Yeah. And I think also understanding what their plan is with it too, right?
Of course.
Because I think the thing that, and you and I have had this conversation off camera multiple times, it's a lot of people buy things and they have no exit strategy. They never plan for like what they're going to do with it.
No.
And you'll ask them and they're like, well, I don't know. Like, I want to own it. It's like, well, you shouldn't own it for the next 15 years.
Or not even be very stretched then on your equity either, right? So there's a lot of mistakes that are being always people make.
Yeah.
But like you said, it's about proper planning and knowing what you're up against, like your 3 to 5 year plan. Is this the property you're going to hold on for longevity?
Yeah.
Or a legacy property?
And if it's a new build or there's a big renovation, when do I break even and when does my money come?
When do you exit?
Yeah, because the reality is we know you can hold it for 7 years. Well, you're going to get the 7th year, you've got a renovation coming.
Of course, and that's the reason why it's so important that we have to manage third-party relationships. Actually all of my properties have third-party management and also asset management. And they're separate roles, right? And they're looking out for different things. But they're also going to guide you with data and also being proactive and knowing that this is when we plan to exit. This is when we plan to deploy and recycle our capital.
And I think that's I have many things I feel like people forget, but they've got to go into it with a plan. It's like if you don't plan, then you're going to end up in a bad...
It's a recipe for disaster.
It's a recipe for disaster.
It is,
at least
definitely.
Run through the exercise. That way, if we forecast it to be a disaster, you've at least accepted it knowing it's going to be a disaster.
And you mentioned what do I see? I see a lot of people kind of wearing too many different hats.
Yeah.
And so many different hats maybe might not be a good thing to do.
No.
Maybe segment and align your skill sets to the things that you know that you're good at.
Yeah.
And then find the people that are very much experts in those fields to partner with. And that will go a long way. Yeah. I've learned.
100%, because there's people that are very good at 3 or 4 things that are valuable to the business.
Yes.
But then there's 3 or 4 things that they think they should continue to do because they're great at these others. And it's those 3 or 4 things that end up taking them down.
And that's so true. And that also delays the project. And it just, at the end, costs them more money.
Because they don't know what they're talking about.
They don't know.
That's when I feel like the franchisors, especially on the franchise side, will start to, once they realize that the owner doesn't know what they're talking about, the owner gets taken advantage of 9 times out of 10, is my feeling. Because then I'll look at it afterwards and I'm like, why did they ever agree to that? And it's like, well, the owner didn't understand.
Right. But the thing is, as an owner, we have to protect our assets, right? And from the start to the end, we're putting our life savings into these deals. And for us to just kind of blindly sign off of something, we just never do that. You have to do your due diligence.
Yeah. That's why I always tell people, I don't understand why people do this, and maybe you can answer this question for me. So you'll go buy a house, $500,000, let's say, on average. You're required in, I think, every state, a home inspection has to be conducted before you close. The same rule doesn't apply to commercial buildings.
It's at your discretion.
It's at your discretion. But people will then go out and spend 30, 40, I've heard as much as $100 million. They'll go out, spend the money to buy an asset, usually more full service, I think this happens on, where they'll buy a full service hotel that has a lot of inner workings. They'll never order any type of environmental inspection or any type of mechanical inspection, nothing. And they end up in a situation where they then have possession of the hotel and the place is falling apart.
You just mentioned something about full service hotels. I've acquired a couple, and what I notice is your perspective of a PIP and a renovation is totally different from somebody else's.
Yeah.
And that inspection, third-party inspection, is so critical because you have now a neutral party coming into the deal, having their assessment, doing their due diligence as per code regulations, as per just investment strategy, along with what the franchisor requires. And those are all critical steps that you have to kind of engage in. Yeah. And the best thing to do is the third-party partners that you put into your group.
100%. It's money well spent. Like, you need to know up front if, elevators always seem to be the thing that gets people. They're expensive to modernize. And if you don't catch that ahead of time, then you end up with $1 million bill after you own the property, and there's nothing you can do about.
And that's the thing that I also feel like everybody underestimates that. Typically, you'll have a 3 to 5% contingency for maintenance and whatnot. But if you don't have a property inspection report, you really don't know what kind of warranties you have in place, when you're going to see these big expenditures coming out. Yeah.
And the PIP is not a building inspection.
No, it's not.
Like, it's just
keeping up with the brand.
It's keeping up with the brand.
So
there will be mechanical things called out, but it's not. They're not looking at it the way an actual.
Of course not. They're not looking at your pool to see if it's going to be working in the next year
or if all the water is going to go out.
Exactly.
It always blows my mind that people will spend millions and millions of dollars and they'll never have an inspection.
Yes.
And
that
then,
is the key
and then
thing.
they're surprised later. It's like, what gives you the ability to be surprised at this point?
And that's why it's so important to have an owner advisory services embedded into your acquisition. Because I feel like they will cover all the services and all the areas that you need to be able to kind of look at it with a different lens and to understand that you've crossed your T's and you dotted your I's over and over again.
Yeah. At least do that work and pay for it to know that you're good after the transaction.
Well, if you don't pay for it in the beginning, you're going to pay for it at the end.
And you'll pay double.
You'll probably pay double.
So there's a broker that we work with that always told me, Bryan, when somebody buys a hotel, they just assume that it's got a roof that works and an elevator that works. And I've seen it so many times when somebody goes to trade the hotel, they're going to sell it, and then they end up giving credit. Well, they end up getting credit for double usually the price of whatever the work would have cost, but it never pays to wait. So
no.
But in some cases, I can't fault the owner 100% because they didn't do an inspection, they weren't expecting it, and they did all their financial planning around the fact that they weren't going to have that expense.
Right.
So, I mean, I guess I can look at it both ways and make a case for why it's their fault, but it's at the end of the day, it's proper
very
planning.
Important. It's
like you
very
have to
important.
do the planning. Like you have to do it. So with all of that said, being that you were investing in other hotels and all of that, what made you decide with Platinum to move to the institutional side and start putting your own deals together to raise capital on?
So that's a good question, right? Because all my life we've done a lot of friends and family JVs, simple JVs, and just partnerships. And over time, along with holding corporate roles, along the time, you're growing maybe 2 or 3 a year, and it takes a while, right? And now it's all about scalability, that expertise, that track record, that lesson learned. You kind of created the system where you can rinse and repeat capital. And by able to have like multi-development agreements, you're now looking at a 10-pack, you're looking at a 15-pack. A couple of our portfolios that we're actually working on right now, one's a 10-pack and one's a 15-pack. All in all, it's that leverage buying, and that's that consolidating partnerships, because what you're doing with one, then you're able to streamline an efficient cycle and a process that's been vetted, and now you're just rinsing and repeating.
Yeah.
And it's all market driven, right? And with that being said, I think that gives you a better validation of what's going on. And you're also able to scale, but then you're also spreading your own risk around all the properties.
Right. Yeah, because if you have one,
You're putting all your eggs
if you
in
have
one.
one market that declines out of the 10,
And COVID taught you that, right?
100%. I think COVID taught a lot of things.
And that's where Platinum Holding actually pivoted, is that, it has to be a defined focus where you're able to kind of define your risk and spread it, and then be able to look at it in a different lens where you're looking at a scalable growth mechanism. And by doing that, you're able to kind of proactively kind of predict your outcomes and your needs.
I always say that COVID happened to us all for a good reason. It taught everybody different things. Take some time for yourself.
It's how you take it, right?
It's how you take the time for yourself.
The psychology in me. It's like you can either sit there and play the pity game or kind of say lessons learned and never be in those shoes again.
Yeah, which I think that's the method to use. Like take the lesson and move on from it.
Exactly.
So what do you see right now being like the biggest opportunity or risk in investing in hospitality the next 5 years?
So everybody says, we were just at the NYU conference, and everybody says raising capital is very difficult right now. I do agree with that, but I also feel like the ones that do invest right now, they're about a year and a half ahead of the game, because now in about a year and a half to 2 years, you're going to have these new product. You're able to look at CO buyers. You're able to position yourself to rinse and repeat capital. And that puts you in a very unique space. But you also need to have that unique investment group, family office, to be able to understand how that works.
Yeah.
And having a sponsor or a syndication that understands that and has all that experience to be able to have a unified growth mentality, I think that goes a long way.
Yeah. Because if we've learned anything, it always comes back.
It does.
And if we take the last couple of cycles as an example, everybody that has invested in the time when things were softening up, they've ended up so much further ahead than their counterparts when they were able to secure the capital when it was hard to do. Because if it's a good idea, you'll get the capital.
Yes, and also you got to think outside the box, right? If you're thinking outside the box, you're not going to be competing with all your counterparts. You're looking at different avenues. You're looking at maybe the gray areas, and you're looking for opportunities, and that's where a lot of people grow.
Yeah, no, absolutely. So where do you see Platinum Holdings in 5 years?
Good question. Platinum Holdings in 5 years will have a very, very distinguished branding stand. And I feel like not only being a woman, it's just the fact that, solving for this gray area that I see. We have a lot of hoteliers that are like 15 hotels and lower. Mm-hmm. And then we also have a lot of hoteliers that are in the fund and the REIT arena. We don't have anybody in the middle. And that's where I see Platinum Holding coming and solving for, is that gray area in between, where now you have those 15, 20 properties. And now this new area is scaling in a way where at a level and at a speed where it kind of helps alleviate some of that gap that we see in the market now.
Yeah. Do you think,
if that makes sense?
It makes sense, but do you foresee any of the people that you typically would have done deals with in the past when it's family and friends that were just putting, money here and there? Do you see those types of investors moving over to this model, or do you feel like it's a different?
Oh no, I see them coming more and more. But you know who I see? The younger generation. So my focus is the younger generation, more so than gender exclusive, right? Because the younger generation, they're coming across portfolios that the previous generation hunted, nurtured, and now it's up to them to scale those businesses.
Yeah.
But maybe the resources or maybe the opportunities are not present as easily. By partnering up with like Platinum Holdings of the world, you're able to get into methods and collaborative, just an ecosystem that wants to grow.
Yeah.
And I think that's where we're going to see the most growth, is that younger generation.
Yeah.
They're sophisticated. They've actually worked elsewhere. They're bringing that knowledge back to their own business. Yeah. And maybe they're not even in the hospitality business. They're in other fields.
And many of the younger generation, they grew up in a hotel.
Exactly.
Because their parents owned the hotel
Yes.
and they were having to work. The parents have done what they wanted, they came here
That's
to
it.
do. They've put them through school.
Yeah.
They've done all these things. They don't want to work the front desk.
No, they
But
don't.
they're going to be a doctor
Yes.
or something. They'll invest in it, but they
Right.
don't really care about they just want to know what their dividend is.
Well, that's basically my story, right?
Yeah.
I didn't want to do anything with hotels at all. But at 17, I learned how to build a hotel.
Yeah.
And that is what I'm thinking is that my parents built a foundation when they came to the US. And as my generation, I'm a little bit older than the younger generation, but what I feel is that if we don't make a stepping stone, then that progression just stops.
Right.
We have to keep going. And we have to kind of create those stepping stones and milestones so that everybody around you is able to see that and they're able to articulate that it can happen. It's just kind of like surround yourself with people that are thinking the same way.
Yeah. No,
And that's
absolutely.
important.
Yeah. What's ultimately the legacy that you hope to leave behind?
Exactly what I just
Exactly
said.
what you just said, yeah.
That creating that milestone where they're able to say, that, her parents did this, she did this, and then the next generation will do this.
Yeah.
And if it stops, we're doing something wrong.
Yeah.
We didn't make all these sacrifices. At least my parents' generation, they did not make all these sacrifices
For it to end here.
For it to end here. And I get it. We can get content on working our nice, cushiony jobs, our professional fields. But you also want to feel like giving back and being able to contribute to the growth and the future of hospitality.
Yeah.
Within the Asian American communities, we have a substantial presence of 67% of all hotels are owned by Asian Americans. If our future generation doesn't hold that number or increase that number, we're going to see that number decreasing very quickly.
Awesome. Well, thank you for coming and seeing me today.
Thank you.
Here in beautiful New York. You had a panel you led this week. It
Yes,
went
I
really
did.
well, I hear.
I did. I've been getting a lot of people come up to me and say that they enjoyed it.
Awesome. Well, you'll probably be back next year then.
I look forward to it.
And then you and I spend so much time together in Houston.
We do.
You can find us at Lupe Tortilla. We'll be there. So, but no, thank you so much, Trusha.
I appreciate it. Thank you for your time.
No problem. We'll be right back after this. Well, welcome back. So now we have a new section, Trusha, of the show called the Checkout Rants. What's driving us wild in hospitality right now? We all have these moments in hospitality that make your blood boil. Either guest-facing, on the franchise side, the banks, sometimes it's spouses, you name it, but the policies, the practices, the people, all of those things. What is currently driving you wild in the hospitality sector right now?
If anyone knows me, they will always know that it's always going to be the funding part, lending, right? And being able to know how the projects, either acquisitions or new development, how they come into play and what criteria is being used. So that's always going to be a question of mine and something that just intrigues a lot of interest. But, as we go through the uncertainties of the market, I've noticed a lot of things where, everybody's talking about FF&E. Everybody's talking about renovations for property that people have properties that are pretty much behind on their notes. Yeah. And not only are they trying to catch up on that, they're also behind on renovations. So you're
Thank you, COVID.
Yeah, thank you, COVID. But now you have like two different things that are just putting a cost on your books. And you have to determine weigh the options and what is important versus the other one. Of course, funding is going to be the most important because you have to have your property. But being able to understand that and being able to work with brands and franchisors, be able to understand when they're setting up a refresh or a new renovation that's coming up, do they really know on the other side on what owners are seeing, what asset managers are seeing at the end of the day? Because they're cutting into the profit margins there. And not only that, now with the tariffs charges or the threats of, you're looking at that as well as another cost. Mm-hmm. So it just kind of keeps going back to the overall cost and how much more of the pie are they taking away? And that's what makes a lot of people nervous.
Yeah.
So what do you have? You have a lot of people watching on the sidelines to see, okay, well, when the market kind of rebounds, we're going to do that. So it depends on which person you're speaking to, which industry within the hospitality that you're going to get their perspective. Everybody's perspective is going to be different.
Yeah.
But I know on the owner side, it's just that ongoing list of cost and repairs and renovations, the cost of capital going up, everything you can think of.
Yeah.
And I can't forget labor. That is the big
Most
thing.
expensive costs.
Most expensive costs, and all that kind of hits your bottom line.
Yeah.
And that's less in your pocket.
Yeah. And I would say the franchisors, while I think they mean well on some of the things that they release, it's not always tested properly, or it's tested in a market like New York City where it's going to work because it's in New York City, or what works in Chicago isn't going to work in the middle of nowhere, Iowa.
You bring up a good point, because there's also an influx of a lot of brands out there.
Yeah.
Owners get confused. If owners are getting confused, imagine what the consumer's thinking on the other side. You're like soft brand, luxury, this brand, that brand. And you're trying to figure out, well, who's my real comp set? We're always looking at star reports, but sometimes you don't even know who your comp sets are because they're so closely aligned to each other.
Right. Yeah.
And that's within the own brands itself too.
Oh yeah. And I always use the example of Holiday Inn and Holiday Inn Express. Yeah. Like the colors were different. One was green and one was blue, but from the guest perspective, and I do think sometimes the owners didn't exactly understand that. One was really full service. You had to pay for breakfast.
Yep.
And then there was the Express, you didn't have to do that, and it wasn't full service. But the consumers, I still don't think most consumers understand that a Holiday Inn Express is a limited
Well, they're
service
also in tier 2 markets. Remember that. Holiday Inn Express is like, we have a couple of them, and they did phenomenal with the tier 2 markets. Yeah. And, you got to look at markets, and markets are always changing, right? You have existing properties, they're losing their flags, new come into the pipeline, and you're constantly having to look at what the market demands are and looking to see what kind of consumers there are. Business travelers, after COVID, you're looking at it in a different lens.
100%.
So.
Yeah. And markets that were great before COVID are not great after COVID.
Right.
So,
it's an ongoing
that's why you
thing.
need to do your due diligence.
Always. And it's ongoing. And if somebody tells you that this is good, double check it.
Yes.
Because you don't know. It can change within 24 hours.
It can. It can change right after we pull it in the morning.
Exactly.
By the afternoon after lunch, it's already different. So, well, Trusha, thank you so much. It was a pleasure.
Thank you.
We wish you a safe travel back home.
I appreciate it.
And I will see you soon in Houston, and we'll get more queso.
Okay.
So,
thank you.
Awesome. Well, thank you so much, everybody, and we'll be back next week with another episode of The Check-In. This episode of Check-In with Bryan is a production of RH Media Productions. Executive producer, Tyler Alexander. Marketing support provided by Sunny Timbor. This episode was recorded at Love Studios, New York City, New York. Thanks for checking in. Be sure to follow the podcast wherever you get your podcasts so you don't miss this Friday's weekly checkout. The views and opinions expressed in this podcast are those of the hosts and guests and do not necessarily reflect the official policy or position of Reliance Hospitality Global Incorporated or any of its affiliates, partners, or subsidiaries. All content is for informational and entertainment purposes only and should not be interpreted as professional or legal advice.